Welcome to Estonia. Glad to see so many people visiting Estonia and this forum now already several years. And this is where we started with Bolt. Tallinn is our relatively small home city, first city we launched. And I'll try to share a bit what we've learned from Africa, and potentially also if there are other entrepreneurs who are considering Africa, then I hope that Bolt could be a little bit a showcase or inspiration that if you really, really want, you can expand in Africa, you can build a great business that is beneficial for the local people, communities, people using our platform to earn money. So we started back in 2013. Some of the numbers are hidden behind the chairs. If you want, I can show you. So, hope you see better. We've expanded now close to 1,000 cities, and that's been really remarkable journey considering we started from Estonia, 1 or 2 cities, and now it's getting really, really many. And if you look at the map, then we consider our home market Europe and Africa. And Africa is a really key pillar in our whole expansion strategy. This was the first region outside of Europe where we started to expand, and now it's a big part of our business. We have more than 4 million drivers and couriers on a platform, and out of them 1 million or more are based in Africa. So this is really, really a key. As a platform, we operate multiple verticals. And what does it mean? We started from ride-hailing or taxi service, depending on the country, regulation. And this is where we are in more than 50 markets and 9 markets in Africa. Secondly, we operate one of the biggest fleets of electric scooters and bikes in Europe. And we are considering some of the pilots, but we haven't really went full into Africa for that. It's also a question of infrastructure availability. Then we have Bolt Drive, which is our newest service. So it's on-demand car rental, currently operating in 6 European countries, more than 30,000 cars available in these countries. And finally, delivery of from 40,000 restaurants or grocery shops and flowers and other basic goods that people would need fast and on demand. What does it mean? It means that we operate multiple services, and that also creates multiple earning opportunities for the people in those cities. So on one hand, there is a problem. On the other hand, there is a solution. So we try to make it work all together so that customers would be happy and the service providers as well. Africa is really growing fast. It's the fastest growing continent currently. The cities are fast, people are young, so there are lots of opportunities. So if you consider which are potentially the markets to expand, then we see that Africa is really opportunistic. There are lots of opportunities. Of course, in our space, which has been mobility platforms, we've been operating 15 years, so the competition there is quite harsh. But there are also other new business areas that are still evolving, and then we see that as new and fast-growing markets, and often really not focused much by the global bigger players. It's a great place to go and build something great. We see that public transportation is not as well developed as in Europe, we've seen. So again, that creates opportunities, and we've been trying to really solve that challenge, see what we can do, and provide multiple solutions. And of course, on one hand, Africa has really low penetration of credit cards, or even bank accounts are not as common as we've seen here on the Western world. But on the other hand, all the mobile payments, mobile wallets, this is something that Europe or is not that commonly using. So again, pros and cons, if you understand what the opportunities are and you build on that, it creates success. So where we are in Africa, we are currently operating in 9 markets. As I said, we have more than million partners using our platform every month to earn. And we have more than 300 employees in our different offices that are running the local business. What's the footprint? So we usually, when we look at new markets, we expand and start the business in a capital city because usually that's the biggest. You build your brand, you build the first business, you build relationships. But what maybe differentiates Bolt from the others is that we don't stay in the capital city or top 2 or 3 cities. In most of the African countries, we've gone to the regions. That's tier 2, tier 3 cities. Why we go there? Because the challenges of the city mobility is often the same. People want to move around. Partners want to earn income, either drivers, couriers. But the competition often overlooks these smaller cities. And that creates a good opportunity. And that has become an important part for Bolt's strategy. So whatever the countries you look at, we are really widespread all around the country. And I think that makes us really stronger, and that's the commitment. So if we go somewhere, we really want to make sure that we are available everywhere. And that also creates the scale and the brand awareness and all of that. So when people even move besides the cities, they can be sure that in most of the cities, Bolt app is available. When we entered the market in 2016, of course, there was less regulation, but we saw that relatively few people were able to use taxi or mobility services. And on one hand, there were incumbent taxi operators. The services were often expensive or maybe not that readily available. On the second hand, we had some of the competition, our American friends and several others. And when we looked at the market, we understood that a big part of the needs were not covered. And so we started to test, build pilots, and what that meant. I already explained that localizing it for local payment methods, because our competition was only offering services with the credit cards. But if you understand what's the penetration of credit cards, it's from 3% on some markets up to 10-15 in the more well-developed economies. But that's a really small part of the whole society who would actually need to get around. So we're the first ones to actually introduce cash payment methods like mobile money, M-Pesa, and so on. And with that, we also created opportunities again. So we understood that the challenge is that drivers often want to work, but they don't have the vehicle. Either will be a motorcycle or a 3-wheeler or a car, so that getting partnerships, as Gerald also said, partnerships is really the key. How we are able to build something that drivers who don't have a vehicle can actually start renting it and then buying it out, owning it, and many drivers actually want to become the fleet owners. So they buy multiple vehicles if they are successful and so on, so they can actually build a decent small business. And this is something what you really need to understand, what is local, how it works, and how to build it. So what's our principles? So again, Gerald mentioned that building an African localized business from Tallinn is really complicated and maybe even impossible. We can share some best practices from another cities, but in order to build the best service in Cape Town or Lagos or elsewhere, you need local people. And this is what we've done from day one. We've hired young, ambitious people who are willing to hustle, learn, and be innovative, entrepreneurial, and let them figure out what are the opportunities in that city, what are the needs, talk to drivers, talk to communities, talk to the city government regulators, and then figure out what's the best way. And this is that actually that strategy has supported us and being able to be market leader in majority of the markets where we operate. Secondly, we tried to adapt and build all kinds of different tests. So we're the first ones to pilot electric vehicles, 2 or 3 wheelers, also smaller and bigger cars, because there are people who want better service quality. There are other people who want much more affordable service. And for them, maybe the car can be older. It still takes you from point A to point B, but it costs less and the affordability is much, much better. So trying to build something for every segment on a market. Or it could be women and safety part, because this is really, really important. So we have categories for women drivers transporting other women. So all of these things are something small, but it actually brings value to the ecosystem, to the customers. And finally, what we've already learned early on from Europe as well is that, as said, Africa has 54 countries. Europe has as well tens, and with all different regulations. So from very early on, we have always tried to work with the governments, with the regulators, with the cities. Because if they know what are our goals, we know what are their challenges, then we can work together and we can often build the regulation. When we entered in 2016, there was almost no or very little regulation in the ride-hailing or taxi space. But when the economy has been growing, everyone has started to look into it and regulations come. And when the industry is actually taking responsibility and trying to behave as a decent citizen and working together with the government, then you can find ways. If you don't talk to the regulators, they might have their views, we might have ours. There could be misunderstandings, and in the end, no one will win. So in that sense, we have been always trying to be at the table, being proactive, and being open about our goals. There are several case studies where we have been much more adaptive than the competition. A recent one in Tanzania, where the regulation was about to change, and our big competitor decided to exit the market, and we've seen globally many similar situations. We stayed, we discussed the regulation, what we can do, how to adapt, and in the end, it created us an opportunity and a very decent growth opportunity. So this is good learning from Tanzania, but also in other countries. So what's the real impact? So the gig economy in Africa is growing a lot. For example, in Kenya, it's already close to $1 billion a year. And for many drivers, that has become kind of the first source of income. So, and why is that? Because they see the opportunities are there, it's flexible, it offers them skills or opportunities to learn, become small business owner, and so on. So it's kind of an amplifier of the people, and on the other hand, offering solutions. And on the other hand, some examples of the recent pilots, what we're trying to do is also on the sustainability side. So a few years ago, we started a pilot with 300 electric motorcycles. The competition was tough, but in few years, we have been able to beat the competition, be much more flexible. And what I mean by this flexibility exactly is offering very good financing opportunities for the drivers. They start renting the vehicle, then they become the owner, and in the end, if they want, they can get multiple vehicles. So the electric boda bodas is now a great success in Kenya, and we've been able to become the market leader in that fast evolving segment as well. Secondly, in South Africa, they recently created a regulatory framework for the platforms, and again, Bolt was in the forefront of the industry, negotiating, cooperating with the regulators, and we also became the first platform that obtained the official license in South Africa for operating ride-hailing platforms. But also the impact is wider. So already several years, we are running Bolt Accelerator program. So what that means is that if you work as a driver or courier, but you want to build bigger career or evolve your career, then we are offering mentoring for entrepreneurship, tens of thousands of hours of mentoring, learnings, and enabling drivers to invent different business ideas. It can be related to mobility, but it can be also something else. But whatever they aspire, they want to do, we try to support that. And we have hundreds and hundreds of great examples where already the businesses have taken off. We also give them grants as a small seed capital, then they can move on for other financing opportunities. And again, we've seen great feedback from the market to offer this kind of involvement. Safety is definitely a key part of the whole concept when you want to run a business that involves multiple people, and ride-hailing and food delivery definitely includes that. And this relies on three main pillars. That is the same logic in Europe, in Africa, globally. So the first part is the technology, what we can do on the platform to make sure that everyone is properly verified, that the people using the platform are safe, they are the people who actually say they are, and we have selfie checks and many other things. Sharing and connecting with different security operators and 24/7 customer support, those are just the basic parts from the technology side. Then education, what we can do, how to choose which rides to take, which not, what are the potential critical things, building awareness among the customers and drivers. And definitely also the onboarding of the drivers is really, really important. Explaining what the values are, what good customer support looks like, so that the drivers would know what we expect and what customers would expect. Because common sense, often we've seen, means a very different thing in one country or one community compared to the other. So you have to tell and define and also monitor it. And finally, the collaboration with law enforcement, regulators, everyone, and then constantly monitoring what's going on. So over the last several years, we've seen a decent drop in the safety incidents. The platform is getting safer for both of the customers and drivers, and also that reflects in the media coverage as well, so that we put a lot of emphasis on the safety, and it's working, it's definitely evolving. And if we look at ahead, what's going on? Africa is fast evolving continent. Cities are growing. There are so many more opportunities. So we try to, again, go into smaller niches, improve our services, come up with innovative ways, what fits this specific city or community. And this is everything. So we want to create the infrastructure for customers and drivers, partners to be able to use the platform in order to decently live in a city and use the services that they want to. So we started from Estonia, but we keep growing in Africa. We are very thankful for all of our customers, our partners, regulators, and everyone, and probably you as well. If you use Bolt services, thank you for that. Share us feedback, and we try to do our best to keep going, keep growing. Thank you.
Thank you very much, Martin. I think quite interesting, especially because then the scaling in Africa is quite, as you said, it was built in Estonia, but Africa is helping Bolt to grow. So we are integral to your bottom line and your wallet. Now, I want to ask if there are any questions. We can take one or two. There's one here. Start with the one who's at the back, then we'll come to the front.
Thank you very much. I like the fact that you brought in the regulatory conversation, and Tanzania is a very compelling case when it comes to this scenario but I think regulation worked for you because a competitor left the market. So now I would like to ask about a situation where regulation itself was the problem, and if there is a playbook where for you compliance would require you to operate at a loss or compromise your affordability or something in that scale in any of the markets that you have operated in, and what did you do in this case? How did you handle that situation? Because I know regulation is a challenge in many of the African countries.
Sure. Thanks for the question. So, yeah, I would say that as a business, we of course need to be adaptable and need to understand what the regulation is. Can we operate in that environment? Globally, I would say that we have different cases where we have a need to leave the market because we have not been able to sustainably operate there. So that is the case. Short term, of course, if we see it's a great opportunity market, we try to talk to the regulators, we try to explain what it would take to run a business that is sustainable over the years. We can't make loss many years. We can take a shorter term loss in order to kind of convince and then try to co-create a reasonable regulation. But in the end, if it doesn't work, we might need to shut down the market or city as well. So we have cases like that as well. So it's not always working very well. But we are still hopeful and we are proactive in terms of regulatory partners. So yeah, and in most cases when we can explain our case, they understand the numbers, they understand our goals. We have been able to find way and keep operating. So I think this is kind of the main way and the strategy how to do that. So yeah, we don't want to leave the market, but there are cases when we have to. So that's what we've seen over the years. Thanks.
There was 2 questions here. Okay. We can start with Pius, then gentlemen, then we'll finish with Jason.
Pius Mushiri here. Congratulations again. This is an amazing story, especially to hear it when we're here.
Thank you.
A lot has been said today about the trust issue. That trust is crucial for you to be able to do business in Africa. Coming from a very heavily tech-reliant sector, how has that played out? Or has technology helped you to overcome the otherwise trust hurdles that other institutions or companies have to go to overcome to set up in Africa? The second question I would want you to share was, what was your entry strategy into Africa? Because we are talking about 54 countries, 54 markets. What was your strategy, starting point, and especially for those people who are looking to go into Africa? Thank you.
Yeah, technology and trust. So I think that we are in a very interesting maybe situation as a company. On one hand, we are a tech company. We define ourselves as tech company. But on the other hand, we move real assets on the ground. And so if you build a CRM or whatever other software as a service business, you don't usually have the on-the-ground operations. And then you can, expand relatively easily. But for us, in order to run the business, we have to have very good technology, very good on-the-ground operations, and in the end, mix of it as well. So that makes it so much more complicated than maybe a regular tech business do. And I think that kind of has been the key success factor for Bolt, that we are able or have been able to build both of those sides and work very well, and also working really hard on finding great local people, because every business is really built by people. So you might have the best technology, but in our case, we need also very, very strong local operations and again, partnerships. So we might have tons of demand from the customer side who want to take rides, and we might have millions of drivers, but if we can't get cars or vehicles to those drivers in order to come to the platform, being online, offering service, we just can't grow. So this is kind of the thing, that you build technology to enable that, to verify, to build trust, verifications, all of that part. But then it's the operations and real-life partnerships with banks, any other financiers, OEMs who manufacture and sell the cars and motorcycles and so on. This is kind of the mix to really make it together. So yeah, I think that's how we've taken it, but we really try to trust the local people and empower them and ask what we can do to actually empower you to build a better business. So do you need better tech? Do you need some other support? And this is kind of the part in the trust. And of course, these people need to be trustworthy in order to build these partnerships and be responsible on the ground. That part. Secondly, the expansion strategy. So the first years, we had very limited funding, both in Europe and then to expand to Africa. So we expanded really, really lean way. So we hired few guys via Skype interviews. They rented a small office and we did online ads to get the driver leads, then starting verification. So I would say that we launched Johannesburg with 5,000 or 10,000 euros, which is basically nothing compared to the industry that our competition have raised tens of billions. And then they have spent also tens of millions per every country to actually build it all out. So nowadays, of course, we are also a bit bigger company. We have 4,000 employees and our expansion model is much more structured and we use a playbook of best practices from other cities. But the early days, yeah, if you have limited funds, you need to be extremely careful, smart, and find very, very talented and hungry people who wanna build a business, who believe in your mission, and then try to make sure that you support them. So this is our learnings. But yeah, I think different companies, different industries, different level of competition. So yeah.
I think there's a mic, Jason.
Yeah. So
yes, we have to cut some questions. So yeah, okay.
Right. So thank you for the presentation and great traction across Africa. So first question is, what have African countries taught you about affordability, about trust, and about product or platform adaptation, which has actually helped you to shape your strategy? Because I believe you've learned quite a lot. And then secondly, looking at Bolt's journey, is there an instance where you actually got the strategy wrong, and how do you course correct? If you did. Thanks.
Learnings, yeah, definitely. I would say that I already tried to explain a bit this adaptation part. So I think this is the key on the learning. So that what works and what not, and yeah. Also, I would say that the culture part is really important. That I think, as said, Africa has 54 countries. Europe has many as well. We have more than 100 different nationalities working at Bolt, so that making all of them work together towards one goal, understanding, trying to use similar principles of direction, understanding the vision, all of that. I think that has been one of the maybe biggest challenges and learning. So we've learned that, okay, how we try to build and explain something in Africa, we could use these methods coming back home. Other learnings is that still, as I said, great businesses are built by people, and you can build remote business for a while, but from time to time, you need to bring these people together. Again, as events like that, people need to meet, maybe have a few beers or do a bit of sports together, team building, and that, again, creates trust between different offices, and this is important. So if we wouldn't bring people together at least once or twice a year, distributing or understanding even the company culture would be very, very difficult. So this is an investment. It's often expensive, but we feel that the value is truly there. So in order to keep these people motivated, to keep everyone on the same page, working towards the same goal and mission. Yeah. What was the second question? Can you elaborate the angle a bit more? So
was there a time when you almost got your strategy wrong, and did you course correct in your journey?
Good question. I have to think. Definitely, we've had a lot of learnings as well. What maybe entering some market early days where we thought that we can build a business, but in the end, I don't recall the specific city or country, but sorry about that. But I remember that based on the statistics, it looked like it's a great market, but in the end, we couldn't get enough drivers to get the scale, and so we needed to pull back the market, and that was the time that we were still quite a tiny company. We were not able to build these trustworthy relationships with financiers to be able to finance vehicles for the drivers, and then just the amount of people who had a vehicle but still were willing to work for the platform. This was so small that it didn't work. So that's one example that I recall. Otherwise, yeah, I think in pricing-wise, many things it's still kind of constant struggle. So because if you talk to customers, they want to have the cheapest ride possible. If you talk to drivers, they want to have the highest income per hour. And then how do you find the balance towards that? And we've seen some markets where countries try to regulate or set fixed prices. So I think that is quite a challenging. So on one hand, I think we see that the market must be dynamic based on the economic conditions, how the income is, how the interest from the driver side is, and then try to balance in there. Because for us as well, it's great when there are more and more rides, but if you put the price too high, then not enough customers. If you put it too low, then drivers are not happy. So those are the challenges of the platform business that you constantly need to do. And yeah, so I think tons of learnings from those aspects. Thanks.
Thank you, Martin. Martin had given me until 4:30. His scooter is charging and he needs to go and unplug it. So he had told me 4:30 he needs to leave. I know there are a couple of questions here, but we'll excuse you unless... Please understand. Please, yes, it's a bull scooter. Thank you very much, Martin.